Well, Ripple just lost one of the very few motions that have gone against them in the case versus the SEC. So I'm going to tell you what it is and why it could have been key to their case against the SEC. I'm also going to talk about Gary Gensler, who just did an interview this morning talking about cryptocurrency, the way forward. Well, it's now become incredibly clear, if it wasn't already, what his stance is for the rest of the crypto market and what he believes is needed in terms of regulation. So I'm going to go over some of his answers as well as some of the tweets that I was live tweeting to really help put this in perspective. And following the Bitcoin crash or pullback of about 10, 15, 20%, depending on the time frame that you looked at, there's been some new information that just came out that was revealed who was actually selling their Bitcoin during this massive sell-off. So I'm going to tell you who it was, and I'm also going to tell you who did the buying. Hey everyone, my name is Randy, and welcome back to the Late Night Grind. And right now on this channel, we are covering, of course, the Ripple versus the SEC case, cryptocurrency news, investment markets, and personal finance. So if any of those topics interest you, make sure you hit the subscribe button, click the bell notification icon so that YouTube will send you a notification when I release a new video. And I believe that people in the crypto space are some of the most generous people on the planet. So if you're feeling generous today, I'd really appreciate it if you do two things. Number one, smash the thumbs up button. And number two, watch this video all the way to the end. Those are really the two best things that you can do to support a YouTube channel. So if you do that, I greatly appreciate it. All right, guys, with that, let's jump into it. So the first thing we're going to talk about is the price action of Bitcoin over the last day or so. It's been following many other markets globally because of the incident revolving Evergrande, the giant real estate company in China, basically defaulting on its $300 billion of debt. That basically sent financial shockwaves around the world, and of course the Dow Jones, the S&P 500, among others, were ones that experienced significant pullbacks yesterday, including the crypto market. So Bitcoin pulled back, and when that happens, it takes most of the altcoins with it. Some more than others, but nonetheless, everybody looks to Bitcoin at a time like this. So now that the data has been coming out about who has been buying and who has been selling, via the on-chain resources, some of the guys that do fundamental analysis and look at all this on-chain data, well, they came out and tweeted some information that's really eye-opening. So of all the Bitcoin that was sold yesterday on Monday, 96.8% of that Bitcoin was actually less than 7 days old, meaning it was bought by somebody less than a week earlier, and then they turned around and sold on Monday during the pullback. What does that mean? Well, it means those that were selling Bitcoin were what we would typically call paper hands or newbies or greenies or first timers, basically the newer Bitcoin buyers. And of course, the majority of them had brand new addresses as well. And on top of it, there's also some information about some of the longs actually getting liquidated, which is what happens when you bet on Bitcoin using leveraged trading. I don't know how long this is going to take, but people need to learn it over and over and over again. Apparently, this lesson that investing with leverage is extremely, extremely risky. You can get wiped out going up or down. So who's the people doing the buying? Well, none other than the whales, the people that own the most Bitcoin. Why? Because when they see a cheaper price of Bitcoin, especially a significant price of cheaper Bitcoin, they're going to go in and swoop it up. And that's exactly what they did. So with the crypto market, what it looks like is that we're going to see a lot of these markets start to shake out. Bitcoin's kind of been trading sideways today. A lot of people are going to have a wait and see attitude towards what this Evergrande problem is going to do for the rest of the, not just the Chinese economy, but the rest of the credit market globally. But if you're someone who studies Elliott wave theory, specifically looking at XRP, you might be buying XRP right now if you've done some of that homework. So I'm going to put a link in the description below for some of the tweets that I was live tweeting out during this interview. So here we go. This should make it loud and clear where Gary Gensler wants to take this. So in Gary Gensler's opening statement, he basically said, cryptocurrencies are highly speculative assets and for the most part are only worth what somebody else is willing to pay for it. Now this from somebody who studied blockchain technologies before even teaching them at MIT. Although he did go on to mention the value of the actual technology and Satoshi Nakamoto, which he mentioned several times, and how this can be very beneficial technology. He basically used that as his one compliment before he went on to rip the rest of the crypto community. He also said that technologies don't last long outside of a social and legal framework. It's better to bring it inside the public policy framework. He said the SEC's broad definition of securities allows the SEC to have jurisdiction across many sectors, including platforms. Trading platforms need to come in and identify themselves within our framework, or there'll be problems and a lot of people will get hurt. He then went on to talk about things like stablecoins and how, in his opinion, even stablecoins could be construed as an investment contract, thus a security. He also went on to say outside lending platforms with excess leverage, with stablecoins acting as poker chips in the crypto community at the casino gaming tables. These are warning signs of a spill on aisle 3, and I'd rather get ahead of those. And he used that analogy several times, a spill on aisle 3. He wants to protect investors before investors could get hurt and Congress has to come running to save them. At least that's the excuse that he gives. He went on to say that I don't think there's space for 5,000 or 6,000 separate forms of money, history tells us. Now, he's basically equating every single token that is out there as a form of currency, which is not necessarily the case. Even though they could be used as a transfer of value, doesn't mean that they're necessarily a currency. And of course, he couldn't be a government agency talking about the crypto space without talking about all the fraudsters and money laundering that he wishes to get under control as soon as possible. So my takeaway from this interview was basically that he is clarifying his stance and that he feels it is his space and the SEC space to put regulatory frameworks around the crypto industry, at least what they have jurisdiction over in the United States. But here's what's going to happen. The speculation's right. If there's too much regulation, if there's too many laws, if there's too many rules, it's going to drive innovation offshore and go to other countries, leaving the United States out. And what's the further speculation? Well, that Gary Gensler was put in place to protect the banks and also to protect the US dollar. So you can go and check out those tweets below in my Twitter feed. I will link that in the description below. You can go and follow me there. And now on to the Ripple versus the SEC case and some new information that just came down from Judge Netburn. And it's not a shocker. So Ripple was actually had put forth a motion in which they wanted to get access to SEC employees' crypto holdings. Now, basically what they were trying to prove was that if everybody knew that XRP was a security and that others weren't securities, that their holdings would tell that story. And they were actually going to use that information to strengthen their fair notice defense. Well, Judge Netburn said, nope, you can't do it. She is not going to allow it, which I kind of thought was a long shot to begin with. But nonetheless, they will not have access to it, even though they will probably come back and say, well, we're not asking for any personally identifiable information. We're only looking for compiled information from finite dates and things like that. But nonetheless, they're not going to get access to it. Now, of course, this does not help Ripple's case, but in my opinion, I don't think it hurts it very much because there is so much information out there already with video after video after video and interview after interview after interview of not just people in the SEC or that were in the SEC, but people in the crypto space saying again and again and again that there was no clarity revolving cryptos and securities during the time that Ripple was selling allegedly unregistered securities. But there is someone else on Twitter who is building a very good case. So if you want to follow him, I'll link that in the description below as well. It is, of course, none other than Digital Asset Investor, who has been digging up some amazing finds on Twitter. So go check him out as well. So let me know in the comments section below if any of this really shocked you with Gary Gensler, because it didn't me. I fully expected his answers would be somewhat vague and pretty broad and basically admit that he wants to control what he has jurisdiction over in the United States regarding the crypto industry. He wants to build regulatory framework, and in fact, he even said in some of his answers that he wants places like exchanges to come to the SEC and ask for guidance and ask for answers to their questions regarding if what they're doing fits the framework of what the SEC would allow. And that's what Coinbase did. Well, guess what? Coinbase hasn't heard anything yet. Brian Armstrong continues to say, we tried to meet with the SEC. They wouldn't even talk to us. And I just saw a headline before I started recording this video that apparently Coinbase has a response to the SEC regarding their threat of a lawsuit if they go through with their new lending product. I can't wait to see what that says. So if you want to make sure you follow along with any and all of these topics, you got to do two things. Make sure you hit the subscribe button, hit the bell notification icon, and of course, I really, really appreciate you guys watching this video all the way through, giving it a big thumbs up. And as always, I'll see you guys on the next video.